Ladies and gentlemen, how are we doing? Matthews here from Emmanuel Forex Traders. I'm here with a brief tutorial and a trade breakdown on Cadjpy, an absolutely beautiful trade that we had on Monday. And today it has just finally hit our take profit. It was a 1 to 10 risk reward ratio with a target of 160 pips. So watch the rest of the video for you to find out how I actually managed to take this trade and everything else. All right. Okay, so basically what we had was this. So let me just show you. So remember, like always, the overall direction is important. What the overall direction of the market? You want to trade in the direction of the market, right? For example, this is a sell setup. Therefore, my main direction is the downtrend. So right here we have a downtrend, and then we have a rally base, drop supply zone right here, and then the market does what? Drops. So as the market drops, then it starts to come back here. It gives us a what? An equal high. And guess what? We have another equal high right there. Then what happens? The market drops, pushes to the upside, and then drops even further to actually come to our take profit right there. Absolutely amazing. So let me just do some labeling as usual. Okay, so what you have here is your QML right here. QML, you have a low, higher high, and break of structure right here. We have equal highs. Price takes out the equal highs, comes to our level right there, and then it drops. So let's just finish that. So remember, this is our rally base drop. Okay, this is a rally base drop. So let's go ahead and just do that. Our rally base drop right here. Okay, awesome. And then what's next? We want to look for our areas of liquidity. So remember, areas of liquidity are different. You can have equal highs, you can have equal lows, you can have the Asian station, you can have triple tops, double tops, all that. Okay, you are free to use whatever you have at your disposal at that particular time. So right here we have a change of what? A change of character. Amazing. Okay, so we go ahead and just do that. We click here and just add our label right there, and then yeah, pretty much. And then the next is, let's just put our higher high right there, and our setup is almost complete. Okay, and then we have our label right here. Okay, let's just reduce the font to 14, and then we have that. And guess what? We determine our entry signal, our stop loss, and our target, right? And just like that. And our entry is right there, and our take profit is right there. All right, so we have a very nice setup here. We have a rally based drop supply zone in the downtrend. Very important. And you have a QML, you have a low, higher high, and you've seen the character, and the kind of that block structure here are significant. And then what do we have? We have equal highs here being created. And then what happens? The market does what? The market takes out the equal highs, which is the retail traders, the support and the resistance traders, and then they're taken out. And something significant happened here. So let me just do this. So the market did drop like this, and then went a little bit up for a retracement, and then did what? Dropped even further. Very important right there. So how you manage this particular trade will determine how much profit you're going to get from here. So it's extremely important. So for, like I say, if you want to actually ride the whole move, you have to predefine your risk and be comfortable taking that risk. Otherwise, if you don't, you'll find yourself moving out of the trade because you're not ready to lose that money. You must be able to predefine your risk and really accept the risk, and then you can take the trade. All right, so let's look at the chart. I hope this is clear. This is basically what we had. So let's just go to the chart right now and show you exactly what happened. Okay, so let's try to use this. See if we can use the 3-hour time frame. Yeah, it was really amazing. So if we go back to the 4-hour time frame, let's determine the overall direction of the market. You can clearly see that for some time now, we've seen the market giving us lower lows and lower highs, right? And then we had this beautiful thing happening here. Okay, what did you have here? We had a clear rally base drop, right? We had a rally based drop supply zone right here, and then what did we have? We have equal highs. We had equal highs just here, right? So what does equal high? When you see equal highs, what comes to your mind? Remember, there's a lot of what? Retail traders trying to sell and buy at those levels. So you will have to be aware of that. And yeah, so we have to wait for these people to be taken out. And once we're taken out here, we entered right here. And this is where the signal was sent. So let me just show you the setup before.
Do you like the way we trade? Well, don't worry about anymore. You can learn our strategy and be able to trade exactly as we do. Our MNF Forex Mastery course teaches you our strategy, risk management, and trading psychology that you need in order to become a consistently profitable trader. This course comes with lifetime mentorship, lifetime Forex signals, free trading plan, weekly trade reviews, plus many more bonuses. What are you waiting for? Click the first link in the description to enroll now.
So the setup before was this right here. You can see that we entered a little bit late. Right here we had a QML and all that right here, and then the market responded beautifully from here, dropped, and then pulled back into this area, and then guess what? It dropped to our target of what? 160 right here. So if you observe here, the market, we entered the trade from here and then dropped, and then immediately the market pulled back into this area. So most people were taken out from here. I mean, most people actually just put out this trade when the market came here. It was pretty good. It was almost like 1 to 4 hours. The market dropped and then pushed back up into the area. So the market has a tendency to do that. Most of the time is to do that. So in order for you to avoid freaking out whenever the market is going against you, just predefine the trade, predefine the risk of the particular trade, and really accept the risk and just let go. Just let go. I know there's people get attached to the money, but this is what you need for you to have consistent success in this market. If you're just going to get this few profits, guess what? You have missed out on these big moves. It's really important. So predefine your risk, accept the risk, and then let the trade run. Yes, you're going to manage the trade, but this time around, if you got out here with a few profits, and look at what happened after the market took you out. This was what happened. So let's avoid that by making sure that you are predefining our risk and ensure that we do all that in order to actually be able to get these bigger wins, because these bigger wins are the ones that actually pays the bills. These are the ones that are supposed to pay for the smallest that you're going to have. But if you're not allowing the bigger wins to pay for the losses, how are you going to be profitable? It will be very difficult for you to actually have that consistent in the market. So in order for you to actually have that consistent in the market, you need to predefine your risk, accept the risk, and just execute. Whatever happens. Of course, you have to manage the trade according to your plan. All right. So I hope you found value in this video. If you did, make sure you subscribe, like the video, and comment in the comment section. Let me know how you benefited from this video. You guys, until next time, goodbye.